Good afternoon, this is Sean Golding with Golding & Golding, continuing our series on FBAR. Hopefully you're not too bored yet. Today we're just going to focus on a relatively straightforward aspect of FBAR, considering how straightforward FBAR can really be about jointly held accounts and how they're reported. A little bit of background as we like to start out each presentation. FBAR, foreign bank and financial account reporting, reported by U.S. persons each year on FinCEN Form 114. FinCEN refers to Financial Crimes Enforcement Network. It rarely has anything to do with anything criminal. Taxpayers have to report their foreign bank and financial accounts. It includes more than just bank accounts. It includes investment accounts, foreign pension plans, life insurance policies that have surrender value, etc., etc. It's electronically filed. It's due April 15th, but it's currently on what's referred to as automatic extension, so you don't have to file the 4868 or the 7004. That could always change. So I recommend each year, depending on when you're listening to this, that, around February or March, you double check to confirm whether or not the automatic extension is still valid. Jointly held accounts. So this is super common. A taxpayer comes to us and they have some accounts in a foreign country. They jointly own it, maybe a foreign spouse that still lives over there. Maybe they have foreign relatives overseas, aging parent, whatnot. And so now the U.S. person is jointly held. It doesn't matter if the person was listed on the account before they were a U.S. person. So maybe Jennifer is in the U.S., but she's been a joint holder for 10 years, but she's only been a U.S. person for 5 years. She would still have to report it at least for the 5 years that she's a U.S. person, assuming that the total threshold exceeds what the threshold is currently, more than $10,000 on any given day of the year. That is in total, not per account. It also doesn't matter if the joint holder, not the U.S. person, is a foreign person. Maybe it's two U.S. people who own it, but let's say it's two people on the account. One is a U.S. person, one's a foreign person. The mere fact that it's a foreign person who is a joint holder does not negate the fact that they still have to be identified on the FBAR. How much you identify about them is something that you would speak to with your specialist at the time that you file. There is a limited exception for spouses, and it is limited. Typically, what has to happen is all the foreign accounts have to be jointly owned. Why is that? Because typically FBAR is an individual requirement. So if each spouse has two of their own accounts and then let's say 4 joint accounts, well then you can't put all the accounts on one FBAR, because for this individually owned accounts, you'd have to have separate FBARs. So that's why this only works if all the accounts, let's say they have 10 accounts, but they're all jointly owned, well then they would all be identified under joint account holder, assuming they don't have any other accounts that are individually owned. That's required. It has to be signed, right? It's electronically signed. I think it's line 43 or 44 when completing the form. And a 114A has to be prepared. It basically is just saying, it's affirming that the spouses are filing together. It's not filed with the FBAR, but it's something that's maintained by the spouses. If you're out of compliance for prior years, there's various programs you can use to get into compliance. You shouldn't do the quiet disclosure. We have other presentations about that. The IRS is really cracking down on that. If you're willful, it happens. If you're willful, you're just not comfortable certifying under penalty of perjury that you're non-willful, you would do the traditional voluntary disclosure program. You'll see it online as VDP. There used to be a specific offshoot called OVDP, but they got rid of that in September 2018, merged into the traditional program. If you're non-willful, there are a lot of other programs available. There are the streamlined procedures, there's delinquency procedures, and there's reasonable cause. We have a ton of free information available on our main websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate, and it's something that we handle here. We limited exclusively to international tax. And then you can always just go to the different websites and try to find as much as you can from our site and try to do it yourself. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.